So the very first thing I do is I look at who's reporting. Who's reporting, and I go through the list to see um I go to the list to see which companies I want to play, which companies have moved the most, who can move a lot. And I go through, this is going to be a busy week. There's Microsoft, Tesla. So I write down companies I'm familiar with and that can move. And then the very next thing I do is, can everybody see this new screen, optionslam.com? Or do I have to stop sharing my
Yeah.
okay, everybody can see optionslam.com. Okay. So I get my list of companies that I like. I type it up on optionslam.com. You can use, this is one of the many ways to analyze. And as you can see, this is a big mover. Intel's a big mover. This meets my criteria. My criteria for earning picks is it has to have two or more big earnings moves. Big earnings move. So like from there to there to 67 to about 60 right there, that's a big mover for a small stock like Intel. That's a big moving company. And then let's put Tesla. I saw Tesla out there, and it's a big mover. As you can see, look at that. That's a big move. And let's see, look for another one. Look at that. That's a big moving. These are the type of companies that I want to play. You know, I don't want to waste my time. Let's type another company. I don't want to waste my time playing companies like this that don't have big moves in earnings. Does that make sense? And if you have any questions, you can stop me anytime.
Hey, can you show me the example with Caterpillar, please?
Caterpillar, yes. And sometimes, and sometimes, this, and sometimes the stock doesn't move that big of earnings, but has a big run up. Caterpillar can run up right here. See the run up right there? Caterpillar could run up, you know. And kind of like with it kind of like we played Avgo a while back. At my group at least, we played Avgo. Like Avgo, like Avgo can move. Avgo could seriously move. Even though it may not get a lot of volume during the earnings report, it could run up. And then I go through the list. Microsoft we could put there. Let me stop the share for a second. Hold on one second, guys. And then I just continue along. I just continue along the list. And I see, hey, Chipotle is is also another one. LVS is another one. And then so those are the first two steps. Going to your watch list, seeing which companies you want to play, and then go through OptionsSlam, or another platform that you could do. Another platform that I don't use this very often, but I did. I use this. Is anybody familiar with this? The Analyze Thinkorswim. Anybody familiar with this? So this gives you the history of the stock and the moves it makes, and where it moved a lot, and it gives you the history. It gives you the history of what Caterpillar did. And if anybody has any questions,
is that during like each other's like fiscal years?
Yeah, fiscal. Yeah, that's fiscal. This is fiscal year. Yeah, the fiscal year. Yeah. And then right here it's the same. And I'm gonna show you. And then the profitability analysis I just saw. I'm gonna show you something a little easier to learn. This is what I use, but in a different way. I'll show you right now. So I selected fiscal quarters. Yeah, my apologies. My apologies. And then so those are the first two steps. And then the next step I do is yeah, getting that share up. Is this is I don't personally trade on this program. I use to calculate which contracts I'm gonna pick. The goal for every play I do in earnings is to is the play stock that's close to one standard deviation, and the those is pull this up higher. The deviation is very off. One second, yes. One second. Can you hear me now? So there's a couple definitions that I can use for standard deviation, but you could think of it this way. You could think of it this way. So you're given it's how confident you are that the percentage where the number is going to end up the way it is. So imagine like taking a poll, like imagine taking like a poll on something and kind of thinking of it as it's kind you're kind of like this amount of people say that it is what it is, and that people say that stock's going to go where it is. And this is the whole variation I use. This is one variation. This is two standard deviations. This is the percent chance that somebody have a question. It's cutting off again. Interesting. Okay. Let me try something. Give me a second. Okay, you want to do that? You want to do Discord audio? Okay, let's do Discord. Okay. So the problem, yeah. Hmm. Let's see. I'm thinking about this for a second because I'm in two signals chats. I'm two Discords. So let's see here. Let's try this. Let's try on my iPad. I'm gonna try it on my iPad. I'm gonna still record, but I'm gonna try it on my iPad. Give me a second. Okay. Sorry, I'm just 1 second. I'm trying to figure something out here. Can everybody hear me?
Yep.
Can you hear me better, guys? Okay. So basically, sorry about that. Sorry about the delay. And the standard deviation is how I select my contracts. And my goal is to be within this range right here, the 34% range. That's my goal. So what I'm gonna do is and I'm gonna explain to you why I played this play until right here. You can see right here, what one standard deviation away, one standard deviation. So there's a 34%, about 34% chance that it will hit 65. And will you be? And the question is, will you be able to get within one standard deviation of every stock? Yes, you can. You could trade anytime. You could go one standard deviation, but you're gonna be paying a lot more. You're gonna be paying a lot more. So if we went to Tesla, let's go to Tesla. Get you're good. If you go look at that, that's one standard deviation. You go to the you go to trade it. Where's the one standard deviation? There it is, right there. You're gonna be paying a lot more. I think it was right here. You're gonna be paying a lot. You're gonna be paying a lot more. You're gonna paying a lot more money. And that's why I say we're not gonna get into every play. And this is what I look for. This is how I play my companies. First checklist is that it's a big mover. Intel, big mover. Can it move? Check out. Yep, check off. Can I get into one standard deviation? Check off. And you know what's odd about this? What's odd about the contract that we picked is that it's a. Wait, give me a second. I don't really use Chase that often. Yes, Texas is a big mover. I could show you that in a second. Texas is a big mover. Right here. Right here. Right here. Two or more, it can move. Boom. Check off. That's checked off. And then after I selected my contract right here, one standard deviation, then I go to my Thinkorswim. We'll give it a second to load. I'm gonna stop the share right here and share. I'm gonna share it right here. Right there. And then the last step I do is I want to analyze this contract a little more. I want to make sure I'm not paying too much premium. So what I would do is what I would do is go on more information. I want to know more about it, and I do a TOS chart right here. Boom. And look, this is exactly what I look for. Look at this. See that? You guys see that? This is no premium. This is what I look for. And when big movers, and this could be a frog because the stock moved up yesterday, a lot yesterday, but the contract didn't really went almost to its lows. It didn't go up as much. So, and then let's look at the puts. Let's go back to Tastyworks. Let's go back to Tastyworks, and it will let's go back to give me 1 second. And it's saying 55. It's saying 55 for the puts. And then we'll go back to Thinkorswim. And then for contract selection, and I better answer this question right now. For contract selection, I almost always they report this week right here. I always want to get as much time as I can. I always want to get at least one additional week. You could do weeklies. You could spend if you want, if you're on a low budget and you want to spend here, go ahead, do it. I just found by experience that getting more time, 1 week or more time, I profit more. I make more money. And let's check the puts. Since I showed you the puts, look at that. You guys see how it's the same price almost? Basically the same price? Look at this. This is what I look for. I look for balance. So look at that. See, oh, yeah. There we go. It's the puts. It's the puts loading. It's loading. Give it a second. See right here? This is depreciation. We weren't able to play the puts, and the why I play the straddle is that it gives me another 34 chance. So that's 68% chance that it could go either direction. And this is a sweet deal. When I look for straddles, I like to make sure that I get a balance of prices on the put and the call side, the same balance. And in trade signals, I couldn't do that because the puts were I couldn't bounce on the trade signals when I played earnings last quarter. I couldn't play the puts because the puts were way up there. The puts were way there, and the calls were way down there, and that's not a balance. You know, I can't get my game. I can't get that balance. Does that make sense? Does this all make sense? And then the last step is to get in the trade. Again, 3% of your account. You know, you should be getting to 3%, like James Stock said in the webinar. You know, and then I'm gonna stop the share here. I think that makes sense. That should. Is yes. Texas, yeah, Texas, yeah. We answered that question already. And we could do the same thing. Let's go Texas Instruments. Same thing. Okay. How far are we out away? We are about we are somewhere, we are about 1.5 standard deviations. A little less than 1.5 standard deviations. So we're about, wait for a load. We're about maybe right around there. And if we were to get the puts, it would be less of a chance. But sometimes you have to get within outside there because the contract prices are like more expensive, you know. Sometimes you have to do it. And this is, if people who traded IBM, this is why we won the trade. Because that blue line, the 1 standard deviation, was right around there. Was right around here, and the stock price kept going up, which means we got closer. We got closer to the mean. We got closer and closer. So we were able to profit off this. And can you still be wrong? Yes, you can. But you could out of my strategies, you could still be wrong. But if I hit one of these trades, I make up for some of my losses, and I make more profit out of the losses because I'm risking very little premium on these plays. Am I going to play every stock earnings? No, I'm not. But I'm going to play the ones that will give me the best price. And the best price that I saw is Intel. That's one of the best prices I saw. And we got a question. Hold on a second. Yeah, I'm going to say, yeah, means, yep. Right in the middle. Let's go to McDonald's. Let's go to McDonald's in one of our trades. The McDonald's trade's a little bit different because we got more time on it. I mean, we could have got around here with less time, but I wanted more time on those contracts. And I thought I liked the cheap offer. But I do this almost every season. I do almost every earnings season. Oh yeah. And then let's go to the table right here. If you guys find that it's too expensive to get my trades, my suggestion would be a debit spread, like a call debit spread. So we buy here, sell here, buy, sell here. So that would cost you, and I'll do one right here. Cost here, max profit right here. But you have to be approved for debit spreads. That's the problem. That's the problem with Thinkorswim. You have to be approved for margin, but you could do it on Robinhood. So if my trades are too expensive, you could do this, but you got to get the most profit for a debit spread. The spread would be high. This is 500 max reward. This is 220. I go for 500s. But does that make sense, guys? Does all this make sense? I hope it does. Okay. Does anybody have any questions? Yeah. when this meeting's over, when this yeah, when this meeting's over, I could talk to you about the basics of the options when the meeting's over for everybody.
Were you talking to somebody individually for that?
Yeah, I could go individually. If anybody wants to stay after and listen to the basics of the options, then be my guest and stay. But does anybody have any questions? Does anybody want me to look at stock? And by the way, I'm gonna buy those Intel puts because that will give me a greater chance of winning the trade. Because if we lose on one side, we'll make more on the other side. Anybody have any questions? Microsoft. Okay, let's look at Microsoft. Does everybody? Yeah, let's go. Let's do Microsoft. Let's do that. Might as well. Let's do that. Okay, so they report this week. So, to be within the probability of making the most profit, I would want to be right here. I would want to be within the 220 range, around there, at least a week at a time. Let's look at the options. It's a little. I'm gonna scroll down a little bit. Yeah. You're gonna have to be around here to get the most probable chance. It's a little bit expensive for me, Microsoft. And Option Slam, it's not the biggest mover. And then I want to be within this range right here. The puts are significantly cheaper. This is not the best deal I can get. Can Microsoft move a lot? Let's take a look. Research the stock company. Research. It's not the biggest mover. I don't like the prices that much. So next trade. Next, please. Alex played that for the run up, which is different, which is what I do mostly. Microsoft is not the biggest company that moves up, so I'm gonna pass. I don't see a play for me in Microsoft. Does that make sense? Sure. Does that make sense to answer your question? And somebody want me to look at AAL? I'll look at AAL because I think somebody wanted me to see AAL. I'll start with AAL. When do they report? I will say I don't like playing these cheap stocks. I don't like doing options with cheap stocks. For me, I found to make more profit buying multiple shares. I'll look up AAL Option Slam. Even if it was, I remember it. Yeah. It's not the biggest mover. It's not a mover at all. I'm not gonna play it. I play big trading company. I play faster movers. I don't want to waste my time with that. Okay, somebody put a stock up there. I'm going to answer that. NRG, let's look at it. Let's see. When did they report? Let me find out. And you also know sometimes when you're playing earnings that a lot of the premium will run up on both sides, even if the stock moves up. And that helps. That really helps. NRG reports August 5th. I'm not going to make a play right now with it. I'm not going to waste my time right now playing. Especially with NRG, that's not a big mover. Let's see. Let's look at OptionSlam. Why not? Okay, I've seen enough data. It's not a big mover. They got August and they got earnings for a while. I'm not gonna make any plays right now with it. I don't like it. Does not meet my criteria. And when okay, another thing is I know I'm repeating myself, but I gotta say this again. Go play your account size. Make sure that you are going less than 5%. Less than 5%. MVS. Oh yeah. NVS. Let's look at NVS. MVS 88. We want to let me check the earnings. Let me check the earnings real quick when we report. I like LVS. That's Novartis. I would rather go MVS, but let's see. July 21st. I would rather play LVS than MVS. Actually, hold on a sec. Is that? Actually, they're not too bad. Let's see the contracts. I still would rather play LVS, but let me see the contracts. The airport's 21st. No, we don't want August. Oh, okay, another thing. Okay, the share screen's a little slow. I'll wait for a little bit because the sharing screen's a little slow. Give it a second. I'm not on that screen. I don't like these expiration dates. I'm not a big fan of those expiration dates. I'm not a big fan of those the companies that have expiration dates like those. I don't like playing them. But I would rather play LVS. Las Vegas Tech. What is one standard deviation? I would rather play LVS. The contracts are a little bit pricier, but that's puts.
The puts have me worried a little bit, actually. Let me see how much it cost. Actually, yeah, they're a little bit more expensive, tiny bit, but I like LVS better. NVS doesn't quite meet my NVS can move a little bit, but I don't like I'm not a big fan of those strikes. And then somebody wants Abivai. I love Abivai. I don't really play Abivai for earnings. Some of my friends and I own the stock because of the dividend yield. But as far as earnings, I don't play it. I really don't play it. Let's check. You know, I may have missed some quarters on Abivai. Let's check. And as you can see, they're not a big mover. So I'm going to pass on it. No problem. The main thing is you guys are understanding it. You're understanding why I'm picking cheap contracts. That's what I want. I just want you to understand that because that's the main thing I want you guys to get out of it. Because why put in $1,000 for a contract when you could put in $40 and turn to 500? You know. And then the last thing I want to talk about is the ways I sell. Let me cancel these. Let me cancel those right here. I'm going to cancel this order. I don't want to do this. Delete the leg. There we go. I want to delete this leg. Okay, so here's what I do when I get profit. So let's say I own 10 contracts. So I want to move. That's why. Steven, can you mute yourself? So here's the ways I sell. So let's say this hits 90. Let's say this hits $100. So what I'll do is I'll sell 5 of them, take them for profit, and then let's say that this guy hits the same price as the one I purchased for, or more. Then I'll sell out of this. I'll sell at this price, get my initial investment back. I'll get my investment back. I turn it into a debit spread, and I can make $500 max profit because of the difference. 70 minus 65. That's 5. That's the difference of 5. And I could be in a place for free. So that's how I sell. I rarely average down the earnings. I rarely ever do. Unless I'm like I made a bad trade. I got too far out. But those are how I sell. I hope this makes sense. And does anybody have any questions? Yeah, I could do that. No, I could do that in Enrique. I could do that. Not a problem. Here's what I'm gonna do tomorrow. I'm gonna buy this contract right here. Why buy it? When, again, what we talked about. One standard deviation away. I want to get the odds in my favor. I have this contract, 34% standard deviation. I want to increase my odds. And then I want to flip some. Like I told you, same principle. If I own 10 and this goes up a lot, the put side goes up a lot, I'll sell some and then I can either sell the rest or I flip it in these contracts and turn it into a debit spread and collect more money. But yeah, I could do a trade live. I could do it live. Hopefully, tomorrow. Tomorrow might be hard. I'm fishing. Monday might be hard. Yes, you could do this on Robinhood. You could trade on Robinhood, but you're not gonna get the technology. You're not gonna get this in Robinhood. You're not gonna get this. But you could trade like this in Robinhood. I'm just showing you how I pick contracts. I'm saying there's a 10 school aspect. You can do this on. You can make trades in Robinhood. And then I wanna go over a little bit. Who wants I need at least one person who wants me to show you how to find mispriced options. Who wants me to teach you guys? Who wants to learn how to find mispriced options? Okay. I hope this. Okay, so that lecture's over. Now we're moving to a different topic. This is called. What's a mispriced option to you guys? Can anybody answer that? We'll give you. I want your own opinion. What a mispriced option is. So that's okay. That's okay that you don't know. We're all learning this process. So mispriced option to me is. Go on. We have a question. That's not quite it. But I like your idea, Yosha. That's good thinking here, but that's not where I'm trying to get at right now. Mispriced option is basically when the contracts closer to the money are cheaper than the ones farther out. The ones that are farther out of the money. Those are hard to find. Those are easy to find. A lot of chains, if you go through every chain and every stock, those are easy to find. But the hard part is finding the companies that move a lot, like Tesla, who can move a lot, that can move $100, and finding those mispriced options. And they're easy to find. They're actually quite easy to find, but what I try to do is try to find ones that are cheap, that are really cheap.
Beyond.
Beyond? You want me to do Beyond Meat for earnings?
Yeah.
Okay. Is it okay if I go to Beyond earnings? Yeah, I can do Beyond real quick. Beyond's a tricky one because Beyond's different in Intel because the standard deviation is greater, is a lot bigger because Beyond is a faster moving stock. When do they report? I want a date when they report. Give me 1 second, guys. They report next week. So I want to be. It's a little early to be on calls or puts right now. A little bit early, but I want to be in this range for the puts or lower, and I want to be in this range. So go down right here. You don't want the weeklies, so I'm gonna exit out and go to August 7th. I don't want the weeklies at least. And as you can see, it's a little expensive. So like I was talking about, this is one of the plays where I might want to do a debit spread. Oops, other way. I don't want to do credit spread. Oop. No, don't want to do that. And bear with me, guys. I don't use Tastyworks a lot. I don't use Tastyworks a lot. So let me see if I can change it. There we go. There we go. Right here. This is one of these companies where I will do debit spread because I know I want to be on meat, and I know that I could find a way to get into a stock that cheap. 32 max loss, 468 max profit. Boom! I could get trade without risking anything. This is a spread. Boom, boom. And then the same thing on the put side, you know. The puts are a little more expensive, around the same price. But I know that Beyond can move. So we could look at OptionSlam, we could look at other stuff, but I know that this is a company I want to play this company's earnings. I know it can move. Does that make sense, Ryan? Yeah, okay. Going back to mispriced options. The app that I find let's go Tesla. The app that I find the most mispriced options is Robinhood. I know it's a very, very, very bad brokerage, but it for some reason it's the number one brokerage I find the mispriced. And where do I see the best deals? I see the best deals when the stock's the most volatile. That's where I see it the most. Obviously, the stock market's closed right now, so you're not going to see it. But I see it when. So let's give an example. Let's say. Let's say IBM has new software that's coming out and it's going to change the world. The volume's going to pick up on these. See the volume right here? It's going to pick up on all of these. And this means the chain's going to go crazy. And sometimes you will get like an August 14th, 139 call be at the same price. It'll be at the same 140. It'll be at the same price as the July's, and that's a mispriced option. That's a mispriced option when there's a lot of volume in a stock. And the farther out expiration, same strike is the same or cheaper than the one that's going to expire closer. And and there's a lot of chains. There's a lot of and there's a lot of chains that there's a lot of cheap stocks, $10, $20, whatever. Cheap stock, you get the point, that have a lot of that are very cheap, have a lot of mispriced options for later expiry, but you're not going to get the same profit as if I were to find like Ulta, or if I were to find like Roku mispriced option. I see really good mispriced options like one time in I say a couple times in 2 months. They're very hard for, I should say, that for companies that move a lot. So I'm going to go over one of the best trades I've done, mispriced options. People that are in trade signals, they understand what I did. Okay, so the day that the market was selling off, stock market crashed, I looked in the IWM. Everybody was giving up hope, and I just said to myself, let me look for a broken chain. So this was around March. Obviously, you can't see it there. And it's just an example. This is just an example. The Marches are not there, obviously, but I just said, let me ask me a question. Oh, I guess not. That's something I did. And I just said to myself, what if I could get a elite call option? Let me check out the calls. January 15th. I looked at the chain, and this whole chain was broken. I kid you not. This was worth $55. These were worth $65 at the time. These were $65. These were cheaper than these ones. And I bought them like candy. And this was one of the best trades because, of course, the stock leaked up. We rebounded. And guess what? Now they're not mispriced anymore. We stole the chain. We robbed the chain, got that's free money. And the trick with mispriced options is getting a good deal. You know, I don't like spending. I try to keep my budget low. I'm a conservative trader, but I hope this example makes sense. I really hope it makes sense. And the trick is to find companies that move big. You know, like this company, MGM, not the biggest mover. The slow mover. I'm not going to make the most money off of that. Let's go NVIDIA. I'm going to make more profit off that. Let me check the NVIDIA chart 1 second, because I might re-enter NVIDIA. So, and sometimes the big movers, we played sometimes the big movers, you could get away with playing far out there. Our trade, I played a 580, but the volume was kept on going right here, and we were able to profit off those because of the volume. Sometimes you can get away with it, with playing far out standard deviation. But does anybody have any questions on mispriced options? Okay. So I'm assuming you guys don't. So that will conclude the meeting. If anybody has any more questions, direct message me on the Discord. And then somebody wanted to stay to go over the basics of options. I'm gonna stay here, but I'm gonna go over to somebody here is new to options, so I'm gonna go over the basics of options. Yeah. So that'll conclude the meeting. Okay. Yeah. Here's what I'm gonna do. Anybody else brand new to options? I'm gonna create a new Zoom meeting. I'm not gonna record it. Yeah. I'm gonna stop recording this one. Are you guys from Trade Signals or you're from Stock Market Society? Okay, so I'm just gonna stay here. Yeah, I'm just gonna stay here. Yeah, I think it makes the most sense for me to stay here. Okay. Please give me like 3 minutes. I need something to eat, guys. I'll be right back, guys.
As you scroll down, this is 69% chance you make $184. How does that sound? You wake up tomorrow, make $184. So I'm curious, guys, why haven't you grabbed my free option trading course? The link in the bio. How does that sound? That's not gambling. This isn't for that. They have a 50% chance of getting better black. You have a 69% chance of making $182. If we scroll down, 80% chance of making $90. If we scroll down again, 90% chance they're going to make $33. This is why it's incredibly amazing. And if we scroll down, folks, what you see on your screen right now is the result for the exact predictions that I made before the splash crack. Moving further, let's say you're not putting any risk. 99% chance you make $2. Passive income. Who cares what the amount is? $2 is $2. So that is why this is the best strategy, as well as the other reasons why I love it so much. So number 2, we can get exercise. That does happen when options are short, when you're short a call, or short a put. You can get exercise. All that means is you have to own the stock before short option.
Good.
So we're doing that. If you're on the other side of the contract, you make exercise your option, you're going to sell the shares to you. You're going to have to own those 100 shares. So
Do that.
cash.
Okay. So I'm gonna do this really quickly. I assume you guys are beginners. So I want to start with asking you guys a basic question. What do you know about options? What do you know?
An option is the ability to purchase a group of stocks, correct?
Yep. Yep. That's kind of the answer. I'm looking for something a little better though. I'm looking for something a little better. Anybody else? What I'm looking for, so that's kind of, you're on the right track. But yeah, it's the obligation. It's kind of like a coupon. You're purchasing a coupon. You're hoping that the stock would go a certain price. And you have the obligation. You buy the obligation to own 100 shares of a company. If you're right, you'll make money. If you're wrong, you'll lose money. But But basically, I would brokerages. I would start using Robinhood. I know it's not the best trading platform, but it's the easiest to understand. It's easiest to understand. So let me start with the basics. So a call is when you think that the stock will go up a certain price. So let's say I want to buy this contract right here in the video. Boom, that's a call.
And your limit price is saying it'll sell at 950.
Yeah, 950 is my risk. I'm risking $950. $950 to do that trade, to do the 420 call.
Okay, so when it says limit at 950, is that saying it's going to automatically sell at 950, or is that?
No, the limit is what you're risking. That's what you're risking. You're risking 950. And you could set a stop loss. And you could set a sell order when to sell it. I don't do that. I don't really do that because and you could ask Alex or at Market how you do stop losses, or Alexary, whoever on Stock Market side. You could ask him how to do stop loss and that such, and stop gain. But I don't do that. Because I'm not risking a lot at all in my trades, for me at least.
Okay.
I'm a different trader than anybody else, and a lot of people at the Trade Signals or Stock Market Society. I'm different. So anyways, going back there, you're risking $950 to make how much money it keeps going up. But what's the problem with that trade? Why is not a good idea to make that trade? Give me at least one reason, somebody, why it's not a good trade.
Isn't it because
Right away.
specifically you're buying, doesn't the price of it cost less than 950? Price of the stock or the contract itself?
Yep. The price is too much. Yep. Is that what you were saying?
Oh, the bid and ask spread.
Yeah.
Yep.
You also told us that you need to use a certain portion. For example, like if you have like $500, just use like 10%, so like $50.
Yeah.
So at that point, you're losing infinite.
Yep. And then another very important part is if the stocks trade right here, if the stock goes down a lot tomorrow, this is going to go down like 50%. You could look at the time frame. Let's assume the video goes down $8 tomorrow, Monday. You're going to lose more money because look at the expiration. It's less time compared to if you own like the August 28th. But it's more expensive. Look at the price. Look at that price. Almost $2,000 right here you're paying for. Let me exit this trade out. No, don't want to do that.
But so options are kind of a way to leverage your money.
Yeah, and it really depends. It really depends. And it really depends, like how much you're risking to your account. It really depends. A lot of 90% of traders lose in trading because they don't don't know how to manage their account. They don't. They go all in. They think, oh, it's gonna shoot up. The contract's gonna shoot up so much. Oh, let's put all my money in.
So
And-
specific, oh,
I've done it with Tesla a few times. Kind of screwed me. But I learned from it.
I'm gonna stop the share right here. Give me 1 second, guys. And then a put is, let's go to another company, Tesla. Put is when you think that the stock's gonna go down a certain price.
Doesn't Tesla have a record number of puts right now?
Yeah, a lot of people are shorting. Yep.
yeah, so what's the difference between shorting and calling a put?
Selling a put and buying a put and selling a put.
Well, specifically, what's the difference between a put and shorting? Are they the same thing?
They're the same thing. I thought you meant buying and selling a put. They're different.
Oh yeah,
So let's go to here. Let me get rid of this. Okay. Sorry guys. I'm new to this program. I don't buy stuff here that often. But you're buying a put means that you think the stock's gonna go down to buying a put means that you think that the stock's gonna go down to like 1250. It's gonna go down there. It's gonna go down there by July 31st. Problem is, I'll show you the problem of this trade through Thinkorswim. Give me 1 second, guys. I'm gonna share the screen.
So on the strike price, to say it's trading at 1300, 1260 is your strike. Does that mean once it gets to that strike, it's going to sell automatically, or is
No,
that when
you
you're shooting
decide.
money?
No, you decide when to sell.
Okay, so why does the strike price matter? Like, what does that mean?
So the strike price is the strike price is the strike where you think that the stock's gonna hit by expiration.
Okay.
Ugh. Christ.
And so the farther away from the average you're going to get, the more potential for gains or losses.
Say that. Say that question again.
So the farther away the strike price is from the actual price right now, the more risk you're taking and the less, I guess, money you could make, I guess.
Not all the time. Not all the time. But I mostly most of my trades I do far out of the money. I do out of the money because it's cheaper for me. It's cheaper, and if I'm wrong, I only lose a little bit of money. So going back to the trade, was it the 1,300 put? Let's take a look at the trade. Let's look at more information. TOS to there. Look at how much premium it is. Look how much it costs. Look how much premium it is. Look at how much you're paying for it. That's a bad deal. Even though it's depreciated, but you're still paying $4,000 for it. And most people can't even afford that.
yeah, that's So is the strike? How do you define the strike price specifically?
So strike price is So the stocks, so it's trading. So Tesla's trading at 1,500, and these are your strike prices right here. These are your strike prices. These are the options that I could pick. See the puts right here. If I think
Yeah.
it's good down, I could pick any one of those strike prices right here. And strike prices are set strikes where I think the stock could go. Calls. Let's go up a little bit. 1,000. It's trading at 1,500. Here are my options. All these, anything above 1,500 are my options.
So, I know this is, like, you probably did explain this, but, when we first started a lecture, the 6895, the whole standard deviation, do you take the price of it and put it inside the equation just to figure out where you should be landing?
You could, but the standard deviation is more of earnings. Is what I use more of earnings plays.
Oh,
That's earnings plays, and you could calculate it by paper, but you can calculate it by paper, but Tastyworks is going to show you where the stock's going to end up. Like for here, let's go back to McDonald's. It's going to show you right there. Sorry, the share screen's a little slow. Give it 1 second.
whoa.
Sorry, it's a little slow.
No. So it's 191. Wait.
And like I said, with the standard deviations, the closer I get, the more probable chances winning, according to statistics. I'm 34% confident that it will go here, and 68% confident that it will go either there or either there, here. And for the new traders, you guys, I would recommend going to Marcus webinars on Trade Signals, and then SMS, James Jock, and Alex. They're really good traders. They're very good traders. They trade. And then another thing is don't get in my plays until you fully understand what I'm doing. Like the intel I showed you. Go ahead. Sorry.
Oh, sorry about that. I was looking, I joined on Friday for Trader Signal.
Yeah.
So the thing about that is, the minute I started looking at it, I was like, okay, I went to the AI signals, and also I remember Alex posting something. I just don't understand on how I do that on Robinhood. Like, I don't even understand like what it's saying.
Okay. Okay. Let me pull it up. Give me 1 second. I'm gonna go to Trade Signals. I'll do my best to explain. I don't follow the AI signals, the big money tracker. I don't do that. But I'll share it. Give me 1 second.
Yeah, no problem.
Okay, let me know if you can see that screen.
Yeah.
Okay, so AI signals. Let me go there. So that's just what. So that's what people are. That's where the big volume's coming in. This is this bot tracks the swing, buying lawn and stuff, and those are people, billions of people doing that. I don't follow these plays very often because they can be risky. They're risky because a lot of these traders, they know how to get out like that. They know how to get out of trade. These are day traders mostly. I'm not a day trader. I'm a swing trader. Swing trading is when you hold something longer than 1 day.
Oh, fun.
And the big money tracker, and it's the same thing. Sweep. This is what I'm talking about. A lot of volume coming in that DOG call. A lot of volume coming in that play. Yes, you could play it, but be careful. Be careful because they're so quick.
Oh, because once that volume gets really high, everyone's going to drop and take their profits.
Yeah, exactly.
And it's just going to just tumble.
It could, yeah. And I'm not saying that. And the same thing with Stock Market Society. Same thing. Do we have our bot?
I think so, somewhere. Let's move to the VIP.
Where's the bot? We have a bot here too. And I signal both on both trading platforms, so I post to your platform. If you don't have Stock Market Society, then that's okay. I could signal both. Where was the bot? I know we have a bot somewhere.
Is it an S? No, it's not.
Oh, right here. Oh, it's right here. It's the same thing. It's the same thing. It's the same thing. And then the signals, I signal these two signals right here. I signal those. Mark signals these. And then Stock Market Society is a little different because a bunch of people, James signals Forex. And then I'm one to see the guys in the purple to the right side. Those are all potential signalers. Anybody can signal there, and anybody can signal there. Day trades, same thing. You get the idea.
Mhm.
But let me stop the shit. Happening. Leap options. I love leap options. Leap options are good, but I'm gonna share the screen on my Tastyworks. Leap options are great, but you got to make sure you get a good deal. You got to make sure the deal's there. The calls, like somebody did a Boeing call. And guys, I got a couple minutes, guys. If you want me to do another Zoom meeting, I could do it specifically for you guys because there's more to this. I did a bunch of leap options when the stock market crashed. So leap options work a lot, but you got to make sure you got to get companies that move fast. Don't get the slow movers. Somebody did a trade all the way out to here. They work. They work, but you got to check to make sure that you're not paying premium, like I showed you on Thinkorswim. Like I showed you. I got time for. Go ahead.
I was gonna say, why would you want to play all the way out there?
Because I have expectation that we're going to recover next year, and that every stock's going to recover next year. And good news, expectations. Walmart, for example, I was looking for leap options because of the Walmart Prime that came out.
Mhm.
So I was looking for calls way out of the money in hopes that they'll hit there. But that's not it.
And then you can buy if you want to buy the stocks at that price later on down the road.
Yeah, but again, I gotta check Thinkorswim to make sure. I gotta check my chart. I gotta right click and read more about the option to make sure I'm not paying premium.
Okay, make sure.
Because if I don't pay premium, I'm not risking much. I'm safe. You know, I go every option I do. I make sure I could go fishing the next day without worrying about where it hits or not.
Okay.
A lot of new traders, they lose because they go into plays and they're looking at the chart every second. They're worried about losing money. They're worried so much. I'm not worried because I know how to turn a small amount of money into big chunk of money. I made a Boeing trade a month ago, $30 into almost $1,000. You know, you don't
Jeez.
need to risk a lot of money. You don't need to risk a lot of money to get into do trading. You don't need to do it. Okay, I have time for one more question, and I gotta get going.
Well, this one's going to be a quick one. This wouldn't count as a question. Who would you count? Who would you rely on to teach Robinhood or in traded signals?
I could teach Robinhood, but I gotta get going in a little bit.
Oh yeah, no problem. I was wondering if you could teach me Robinhood.
I could show you, but
Yeah,
I
yeah,
can't
not today. Yeah. Anyway, thank you very much for your help.
no problem.
Thank you for
Any
everything. Appreciate it.
Any last minute questions? One question.
No, well, not that I know of.
I'm just gonna get watching more YouTube videos.
Watch YouTube videos on how to buy and sell options.
Yeah, that's what I've been doing. A guy in
Uh,
Stock Market recommended a series.
Any specific YouTuber like Ricky Gutierrez? I don't know.
Trading Fraternity. I learned how to play earnings from him.
Trading Fraternity.
Learn him. Yeah. I learned how to trade from him.
Okay.
I gotta get going, guys. If you want me to do DM me if you want me to do how to teach Robinhood. But these are two different brokerages, Tastyworks and I showed you Thinkorswim.
So I'm not in that Discord. Is that open to everybody or?
Yeah, I could. I'm gonna post a Zoom meeting to the both Signal chats, to both Discords.
Okay, I was just gonna ask if I could join the other one too.
Yeah, of course. No problem, man.
I'm gonna go. I'll talk with you soon about the Robinhood thing.
Okay, no problem. All right, I gotta get going, guys.
Thank you. Enjoy
Thank
your
you.
dinner.
Enjoy dinner. Yeah.
Problem. And guys, just to let you know, whoever played IBS, whoever played Intel calls, I'm gonna be playing the puts so that I could increase my chances of getting the 34 and the 34 right here. Because I have this right now, I want to get here to increase my chances. All right.
Okay.
Perfect.
All right. I gotta get going.
See you, everyone.
See you.